Good morning, good morning. If you can hear me, let me know. Ah, all good, all good. Thank you, thank you. Good morning and happy Sunday. Good morning and happy Sunday. It's a good day. It's a good day. Good morning, good morning, good morning. Another one is upon us. Mr. Henry, Mr. Florine, Jonathan, Kate,
What's going on,
Father.
everybody?
Howdy, howdy, good morning. Let's learn, let's learn. Let's get better. Let's see what we got on the plate. It is sunny on Sunday. It is, in fact, sunny on Sunday.
Morning, everybody. See a couple new faces.
Good morning, good morning. If you're new here, we don't really get started until 5 minutes. We let people come in. If you need to go to the bathroom, go to the bathroom. Grab a snack, a drink. One more minute and we'll get the show on the road. Alrighty, let's get the show on the road. So good morning, good morning. If you are new or if you are old, I welcome you. I welcome you. It's good to have you. If you are new on this call, these calls take anywhere from an hour to 2 hours. We go over news, and then it kind of just goes through. I go into DXY, Henry goes into ES, and then obviously if there's any other things that you guys want us to look at, let us know. We go over the training exercises and just try to kind of answer any questions and give you an idea of what we see potentially unfolding in the markets going into the new week. So if you're new, don't be shy. Please feel free to reach out, ask questions. If you want to type the questions in the chat, feel free. If you want to raise your hand and talk, feel free. It's a pretty casual call. All right. So for the most part, going into the news this week, nothing on Monday. Tuesday we have consumer confidence at 10 a.m. and then you've got some orange folders in and around the 9 and 10 a.m. also. Either that S&P composite yearly HPI, and obviously this caters to S&P, so that will correlate directly to ES. 10 a.m. obviously consumer confidence is the big one, new home sales, and a manufacturing index on top of that. So Tuesday at 10 a.m. Expect volatility. Wednesday, kind of a lighter day, 8:30. You have core durable goods month on month, and just durable goods month on month too. So Wednesday's pretty light, nothing crazy there. Thursday and Friday, I think, is where you'll get most of the movement. You have final GDP quarterly releasing at 8:30 on top of unemployment claims being released at the same time. That price index, obviously, for the GDP is going to add on top of that for the quarterly, that orange folder there. And then you've got pending home sales monthly on 10, and Mr. Powell speaking at 4. Right, that's kind of a weird time to see him speaking, right? 4 p.m. So to me, that doesn't, something like that doesn't affect me as a trader because I'm out of the market at 4. But I encourage you to study around that time, right? What does the market do when you're that close to close, but you've got something like that that's going to inject into the market? So keep an eye on that. Use it as a study tool, see what kind of happens, and when Powell speaks that late in the session, what does it do? But for me, at least as a trader, I'm usually out of my trades by then, and I'm not really worried about that. Friday, core PCE price index month on month, a Chicago PMI, and then you've got a revised consumer sentiment at 10. And then you also have an FOMC member speaking on that late part of the lunch hour. So for the most part, not a crazy month, but definitely areas where volatility will be in the marketplace, right? Tuesday, Thursday, Friday are kind of your key days to look out for. But you kind of got a little bit of everything throughout the week. Nothing too crazy, no CPI, no NFP, no FOMC. Obviously, we had FOMC this past week. Hopefully that was informative to you. Any questions on the boring old news before I go ahead and get into the DXY? News is boring, but there's a reason why it's the first thing we cover every single week. All good there? Alright. I will go ahead and get into ES, or DXY, excuse me. Alright, so I try to, every time I start marking stuff up on charts, I try to keep that there for as long as I can for your guys' sake. So obviously I have been targeting this buy side liquidity pool at 106, right? This high is really where my eyes were. Oops. And from there was a couple scenario situations I kind of saw unfolding. Following Wednesday's candle, right, we spiked all the way down, tapped into this mean threshold and the consequent encroachment wick on the weekly, and then pulled all the way back up, right? That's kind of what was occurring on the midweek call, if you guys keep up with those. I talked about that, and I wanted price to basically, for the most part, stay heavy-handed to the upside, but was looking at potentially this rejection block, consequent encroachment on the weekly, right? Where am I getting this from? I'm looking at this rejection block right here, and I'm getting the 50% of it and extending it out. And now that we're over it, I want to see if price can use that as support. We didn't quite get there, close. Didn't quite get there, but either way, you can see how sensitive it was. There is a BISI right here too. So, going into next week, obviously same thing applies until we get until we can kind of get over that buy side liquidity pool. But note that there is a BISI right there, right? And now we kind of have established a little bit of a price swing, right? So before price delivers into buy side, to see if we can obviously deliver into, and I would preferably want it to stay in and around and no lower than this previous week's high. But you have this, right? We were using this as an order block, and I even said this could be used in the idea of like a propulsion block, right? Even this down closure candle, right? Stacked, right? It's a down closure stacked on this down closure, what we're identifying as an order block. This could become a propulsion block. So even just understanding this, right? This being the open, the high, the mean threshold, and understanding that price kind of delivers in there, right? We're wanting to kind of target that buy side liquidity. It might not, right? It might leave this open, and we might just deliver straight into it. And if that happens, I'm kind of gonna potentially stay bullish on dollar, but still go a little neutral, right? I want to see, what kind of occurs once we deliver, right? Do we deliver to it and through it, or do we deliver to it and then, kind of show sensitivity there? But for the most part, if you guys have been following this, it's been pretty self-explanatory, right? It was ever since we even had this down closure inside this BISI, we were waiting for price to close above it, and when it did, use this as an order block and see basically if the mean threshold is sensitive. We obviously we're given some BISIs too, and with the price action that we were given, the only conclusion that I can kind of derive from it is bullish, right? We're still bullish. The way candles are closing, the way price is respecting discount or raise, there's nothing here that is leaning me towards anything bearish. So take it how you want, take it how it is. Gun to my head, but this buy side liquidity gets delivered to. Whether or not we decide to retrace a little lower before going up there is for this week to find out. If you're wanting to use anything else, also this candle right here, you could also use it as a rejection block, right? You could pull out the 25%, the 50% of this wick. But to me personally, I don't think price even, I think we stay heavy-handed. I'd be surprised if we retrace down in here. If anything, right, you might tap into this previous week's high. You might tap into this BISI. You might touch this weekly rejection block consequent encroachment for kind of an inversion model. But for the most part, that's about it for me on dollar. Kind of just sticking with the same old, until we deliver to this buy side liquidity pool. But for the most part, that's it. If anyone has any questions, let me know. If not, I will give it over to Mr. Henry for ES.
I good morning. I just have a quick question. So, would you say that the target is to complete the volume imbalance on the daily that it was left on November 30th, on December 1st? Because if you see November 30th and November 1st, there is a volume imbalance right there.
Right here.
Yeah. So
Yeah. I want price to deliver through the high. So, there hasn't been any closure here, and I remember even talking about this. I would want closure through it. I mean, I think the closure through it will kind of let me know an idea of if we are actually still pretty bullish, right? So I would want candles to kind of close through it, but I'm not really worried because this is below. This is technically below this high. I really would want the high. So I would, if price decides to deliver, get this out of here. If price decides to deliver just like through it and wick it and come back down, that's fine, right? I think it's a matter of how we close around this high and through this volume imbalance, right? There's a little gap right here too, right? There's a BISI, or excuse me, there's a SIBI. There's a SIBI right here. So I would want price to kind of tap into that, take this liquidity, and then potentially roll back over, but it just depends on how we kind of trade through it. You know, if we're going back to this weekly, right? And we were talking about behind this, right? We were talking about this breaker in here, and we were talking about this high, right? And I was wanting to see how we traded through that high. I didn't have expectations for it maybe delivering it and then going lower or just basically continuously higher. It was how I wanted that weekly candle to trade through it, right? And when we got there, we traded through it and closed. So you know, same thing goes here, right? When we had that week that we kind of closed, I remained bullish, and then you know now I go to the next target, right? The next buy side liquidity pool. So I think it's a matter of how this candle on the weekly and on the daily closes, and what you kind of get following buy side liquidity being taken. It's but to me it's a game of let buy side be taken and then figure out what the closure is following. But to answer your question, yes, I believe that volume imbalance will get filled and at least traded too. Any other questions? Good question. Right, those volume imbalances are key because not only is price drawing towards that, but it's drawing towards it with the understanding of it. What doesn't have it already has wicks, right? It needs closure. It needs that candle closure to kind of balance that out. So you know you can have where were we? Right, you can have wicks in this volume imbalance, but it's still considered imbalanced until you get that candle closure through it on both sides, right? Sell side and buy side. So yeah, just kind of looking for that buy side liquidity, keeping an eye out for these levels. But same old, nothing too crazy. Mr. Henry, are you ready?
One question I
I'm
have.
ready.
Yes.
Go ahead, Andrew.
Yeah, basically like you know, unless we do a full due diligence on the DXY, you know, we should not, is there a rule like we should not engage directly on the indices? I mean, does the insights from DXY provide a better, you know, handle on, you know, whether we should be long biased, short biased, and then only engage in the indices? Or, you know, just by looking at the indices like ES and Q together, we can make that decision?
Yeah, so I'm a big firm believer on this, and I'm crucially watching the dollar when I am trading, and it's for a couple different things, right? I had a bunch of confidence shorting ES this week because of the picture that I was gaining here. But it's not even that, right? It's not even okay. You look into DXY, if it looks like it's going to go higher, that means ES can go lower. I think it is a good identifier of the strength in which you're trending, right? And I think that that's another thing that I'm not really always using it for direction, but I'm also using it for strength, right? If there's times where I can kind of decipher out ES and know if it's actually really trending or if it's just kind of hanging around by understanding the dollar. When they're both displacing in two different directions for a couple weeks at a time, that's how you can kind of start to identify trends. If they're doing the same thing, right? If ES goes higher and dollar goes higher, or if they're kind of doing something that they're usually not doing, you can start to at least save yourself by understanding that the market then becomes mixed. It doesn't become as trending, and you don't get those longer, bigger expansion days. That's why you could be suspect to smaller days and stuff like that. But yeah, I think the dollar is something that is always crucial. affects everything. It's not. To me, the way I like to put it is like and I use NQ too. I don't trade NQ. I trade ES, but I'll use NQ as a tool also. But I think same thing with DXY. I think it's a very resourceful tool, and I think it's something that if you stay on top of it like you would whatever else you do trade, it's just a confidence booster, right? It's another piece of evidence. It gives me confidence when I can understand this and understand where the direction is. Sometimes the sell side might not be clear, or the sells might not be clear on ES. But if you can have a very clear picture of this and understand that this should go higher, and with that ES should go lower, as long as they're not in a mixed market, that should play out, right? And it gives you that heightened sense of confidence going in and watching that. So yeah, to answer your question, I would say it is something that I think is crucial and should be something that all traders look at and kind of take seriously, because people don't like looking at it because you can't really trade it. Well, some brokers offer it, but yeah, I think it's crucial, and I think this identifies trends, right? And if you can, like, if I even like look at what we've been doing on ES, right? We've been going lower. I only on these calls, unless people ask me to talk about ES, Henry takes ES, I take dollar, because you start to realize we haven't even hit our buy side liquidity pool here, but on ES we took the sell side liquidity pool, right? So that shows me that we are not necessarily done going lower on ES, because we still haven't taken the buy side here, right? You might think the job's finished because the low already got taken, but I know that it's probably not finished yet because we haven't taken it on dollar, right? We still have room to we still have room to go, which means ES might not be done going lower. So that's why I use it. Stuff
Thanks.
like that.
Yeah.
Not a problem. Any other ones? Good questions. Good questions. All right, Henny. You're good to go.
Okay.
Bunch of new faces. Some old too.
Yeah, great to see
Alan,
everyone
Axel, Kate, Zingiz, Demetrio, Emmanuel, Florine, Marcio, Luis, Emmanuel, Ismail.
Right.
And if I mispronounce your name,
Just check
guys,
real quick.
I'll get it eventually. I will get your names eventually if I mispronounce it. I'm terrible. But welcome. Glad to have y'all.
Okay, so on ES here, just taking a quick look at the monthly chart. We're back into this year right here between this candle's high and this candle's low. You see that only buy side was delivered here. In August, came down to roughly the consequent encroachment, the midpoint between this high and this low, and then traded back higher, and now we're working back down into it in September. So just based on the monthly chart, if I were making a prediction into where price would go next, just on the monthly chart, the low of this BISI would be the next point that I'm reaching for, right? So it's going to be 43.28 right here. Okay. Price action has been bearish. We're looking for discount raise, and so we're going to be looking for the low of this inefficiency. Diving into the weekly chart, get a bit more bearing here. So last week we continued to break down with FOMC, looking for those sell side targets under the old lows that we talked about. Coming back into the consequent encroachment of that monthly BISI, and then now looking down to the low. And a couple other points you can see here. We have the inefficiency remaining here. Go ahead and mark that out. Between this candle's high, this candle's low. Just falling short of it on Friday. So you can see that's a likely draw going into next week to continue trading down into here. And the consequent encroachment of that is nicely aligned with the monthly BISI low as well. So there's that one. You also have a bit of a volume imbalance here. So this can be another area to look into. Out there. And that is going to be it for the weekly chart. If we do trade straight through these, then you can just start looking for sell-side liquidity pools on the daily chart, right? So, and also potential order blocks. So we have these consecutive down close candles here. See how those were utilized right here, this candle as an order block. Right there. So you can look for price to trade back to that area if we trade back to these as well. And then looking at each of these candles lows on the weekly chart, because each candle low you're seeing on the weekly is going to be a swing point you see on the daily, right? So like here, for example, this doesn't look like a swing point on the weekly because the low looks like it's right here, right? Not right here. But if you go down to the daily chart, then you can see that that is a swing point on the daily. So you'll be able to see the same thing on the weekly chart with each of these lows. Here. Sell side. Same right there. Yeah. And I can see those swing points made up of 3 candles. A low, a lower low, and a higher low. A low, a lower low, and a higher low. Okay. So on the weekly chart, I'm going to check the chat. Good morning, man. Okay, so on the weekly, just going to be looking for these inefficiencies down here, trading into the low of the monthly BISI, and then we have this volume imbalance here, and then below that we'll have sell side liquidity under this low and in this order block if we continue to dive lower. NASDAQ has yet to purge the low we were talking about, just right here. So that's also telling its hands to me that ES could continue to dive lower. NASDAQ hasn't reached that low. DXY hasn't reached the high we're looking for. And we also have these really nice relative equal lows here sitting just above this inefficiency on the weekly chart. So expecting NASDAQ to continue lower as well. On the daily on ES, you can see we've come through sell side liquidity right here under this low, and then utilizing that again as a point of conversion to trade lower on Friday. And now we'll just be looking for this inefficiency on the weekly. You can see the high point of it right here. It's a swing point on the daily. So our sell side liquidity near that low. There's going to be sell stops resting there. And so it makes sense for price to go there to provide liquidity or an exit for anyone who's been short. On the daily chart as well, small volume imbalance right here. Just mark that as another area to trade into. So these are kind of going to be the targets looking into next week. And of course, each of these levels, we can look at the high, the low, and the midpoint of each of them as well. So I'm just going to clear this to make it a little easier to see. So here, we'd be looking at the high, which is just under sell side liquidity, looking at the midpoint, the constant encroachment, which is aligned with that monthly BISI, and then looking at the low. And you can use each of those as an independent target or a partial, let's say if you're in a trade short, to look for exiting. Okay. And then finally that order block down. So yeah, still continuing to look for lower prices on ES. And as we do trade up potentially earlier in the week, if we see something like that, you're going to look for premium arrays on a lower time frame that you can use to trade into lower prices. Okay. I'll note in last week's price action we talked about earlier in the week on Sunday, we talked about as long as price remains in the lower half of this BISI, we could expect these lower prices to trade. Now we're seeing that. And then on Wednesday, we were looking for sell side liquidity, and we know that this weekly is as well right here, which had already been traded almost to the low right here, and then utilized again right here. So when we see something like that, this area, just because this has already been traded through, it doesn't become irrelevant now. Right? This is going to be useful to us as we look into future price action. So that is that weekly BISI mark out there. And then if you go down onto a lower time frame here, as we trade back through it and reach towards sell side liquidity under this low, on the lower time frames, you can use these old areas, the high, the midpoint, and the low, to help you identify an area of interest to trade off of. So if I go down to the 5-minute chart and look how price traded when it reached this area, we're using the high, we're using the consequent encroachment, and then we're using the low here. Again, almost trading down to sell side liquidity, reaching back up to where the low, and then into sell side. Okay, so these areas still remain relevant, and you can work them on your charts and use them to fit with your model. Right, so you could find like a lower time frame inefficiency here, for example, or an order block, and that can be your trade. For example. Anything else to point out on the daily chart? We've got a couple of cities above now. I wouldn't expect price to necessarily trade too deeply into these if it does trade back up, just considering how close we are to these higher time frame draws. But do keep an eye on those if price does trade back up in here. Note the consequent encroachment of that between this candle's low and this candle's high. And this area could potentially be used again if we do trade back up in there. So you're using the low and midpoint of them. Check the chat. Any questions on here? Oh, John. How do you make the fair value gaps with the dotted line? Okay, yeah, Florian answered it for you. So it's a parallel channel. It's this one. So if you click on the one with the trend line, you'll find parallel channel. And you can click and hold your shift button on your keyboard, and it will drag a straight line out. And then when you click again, oops, click, shift, and then you can draw that, and it will mark the midpoint up. Parsing that one to great tool.
Sometimes you have to, it might not be, you have to go in the settings of it if it's not showing the dotted line, and you have to put midpoint and toggle it on. But yeah, it's a really good tool.
Any other questions here on ES? Feel free to come on.
Yeah, I have a question. So with yesterday high, I mean yesterday, yes, Friday's high, we left a daily fair value gap on the daily. However, if we're looking for premium arrays to short ES, would you say that it's better for us to wait until we hit Friday's high to have more to have a more importance premium array to short, or on the 4-hour, just go and try
you can look on all lower time frames, right? Like that, or you want to use the higher time frames ideally as a point of interest, but that doesn't have to be the daily necessarily. We're already so close to sell side liquidity. Like when we were up here, for example, we're much further from sell side. It makes sense to use some of these areas still. Like here, we've traded down into here and left some cities above, and you know how we trade into it here and then trade into the higher one right here. Here, we're already sitting so close to sell side. The algorithm wants to move price quickly to not allow for, to reach this liquidity before a reaction is possible from people who have placed their stops, right? So a lot of times when you see price moving toward like relative equal highs, it moves through it fast, right? It's like a low resistance liquidity run. And now that we're so close to the target, it's unlikely that we're going to trade back very high into this range before reaching that. It's possible it could reach it back up into here, but honestly, with how close it is, I mean, I don't know where we're going to open at 6 p.m. tonight, but it's likely to just reach straight down into here. So we may not even get a deeper tracement into these premium arrays. But if we do consolidate and then trade up, then you can identify premium arrays on your daily chart. Like we have a volume imbalance right here. You can also look at the midpoint of this wick on the daily, and you look at this old low. And then you can go down into your 4-hour chart and see what you find there. So there's a 4-hour CIVI right here. And drag that out and use those points. You also have these wicks on the 4-hour at the swing point. And then on the hourly chart, another CIVI right here. You can use the consequent encroachment of this wick. Each of these are premium arrays. You just identify what stands out the most to you. So if you don't see each of these, that's okay. You can just use the one that stands out to you. So like maybe you see this CIVI, which has already been traded to the high and the low, so that can be treated as a balanced price range. And in that case, you'd likely want to see price only trade to the low or to the midpoint. So you could use that. Set a balanced price range here. So we traded the buy side and traded the sell side. So all of this area can act as a potential premium array to trade lower. And you could see something like this occur. Work down into sell side. Or overnight, we may just see it purge it already. And if that happens, then our bearish bias will still continue as we're looking for NASDAQ to trade lower if this already trades. And we'll continue to look for these levels. But if the first move you get is into the weekly targets that we're looking for, then you have to shift at least a little bit into a more neutral bias as that's reached, right? And then what you do is you just wait and allow those first couple of days to play out in the week, and you'll be able to gain a better idea as to where it is likely to trade to next. Does that help, Emerson?
Yeah, definitely. So just wait to see where we open, and if we take the sell side, then stay neutral, because it's just too much sell side that it has to be taken, right, to go short.
Right. We've had a large move here. After expansion, you get consolidation, or after expansion, you'll get accumulation, but you'll get a reversal. So potentially when you trade into here, you want to just stay a little bit more neutral, wait for some more information, and then you'll be able to identify where the next draw is. If we're going to keep continuing lower, or if we're potentially going to trade back up into some premium place. Let me go to the chat real quick. There's a couple questions. Alan said, why is ESZ different from ES1? I have untapped sell side liquidity on ES1. Okay, so this is something Michael's covered in a previous video. You're going to want to, when you're doing your charting, you're going to want to use the current monthly contract, the latest expiration. Okay, so that's going to be ESZ right now. We were just on ESU, and now we've moved to ESZ. ES1 is a continuous contract, and so it's not going to show all of these inefficiencies that you're going to see on the newest contract. I'll pull it up so it's easier to see. Yes. Drawings. So you can see the difference. This is the current monthly contract, and this is ES1, the continuous contract. So it's going to look a little bit different. This one, especially if you don't have the adjustment. But if you do the adjustment, it should have mostly the same levels, but the thing that's going to lack is certain inefficiencies. So you want to trade and do your charting off of the current contract, ESC, because that's going to show you all of these important inefficiencies that are made. You can see in this price action on the current contract, there's a lot of inefficiencies down here that you don't see in this action. But these are important. It may look like it's just an issue with the data because there was less volume trading here when this was trading on an earlier contract, but this is important information. So you want to use that December contract. Alan, what's your, you said, why would that make a difference? Is that in reference to the same question about the contracts? Just let me know if this answered your question.
Yeah, I think that was earlier when he was talking about it.
All right, yeah, Alan, just let me know if I answered your question. Anybody else? Questions here on ES or NASDAQ? I see Michael taking trades pre-New York Open around 7 to 8 sometimes. If you guys know what model that fits in or what logic he follows to go in before the kill zone, I appreciate the insight. Well, he trades lots of different models, but as you gain more experience in the markets, you can trade out in and outside of a lot of these kill zones. The most important thing always is just going to be understanding what the draw is. And if you're trading at different times, you have the higher time frame draw, right? Like what we're identifying on the weekly or daily chart. And then you'll have intraday fluctuations where you can have a lower time frame draw. Like you might see a 5-minute or a 15-minute swing high. And if we're bearish, let's say we're bearish on the weekly and daily chart. Intraday, you may be looking for price to go higher before it goes lower, right? Because what happens when that happens? It induces people in long, so people buy, and then smart money is able to sell short above old highs to take price back down lower. So you can identify in certain areas where you would expect maybe like a Judas swing for that run higher before moving lower. You can identify those intraday draws on the lower time frame and look for like a high to be traded to before dropping back down lower. But just in regard to trading outside the kill zones, it can be a bit more challenging if you don't have the experience. Inside of the kill zones is normally when you're going to have an easier run to identify.
Is there any way that you guys can touch on quarterly shift theory and what Michael says about it? I mean, it seems to me on his last Twitter space that he's super bearish. He said that there's some, the weeks ahead looks like, very bad for the market as an equities. But at the same time, he tends to be sometimes exaggerates a little bit. So I don't know if you guys can touch on that.
Yeah, I mean, I'll real quick, and Henry, if you want to go into the charts, you can. But I think it's just one of those things where if you look back on the year, right? If you look back on the year, what were we doing in June, July? What have we been doing all year? Really, from like early middle May all the way up until late July, right? We've been going higher, right? If you've been on these calls for the past couple weeks, you've seen kind of us come and go with those shifts. The market can't go in one direction forever, and with that, what goes up must come down, and what goes down must come up. And I think, you know, from early middle May till late July, we went higher, 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 higher. We're just now, what we're really doing is just kind of coming back into that range, right? We're coming back into that yearly range. And you know, it tends to be, if you think about it, middle of May to early August, May, January, February, March, April, May, June, July, August. It's about 4 months. You know, and so now you're going into August, September, October, November, right? And the the fourth quarter is about to start. So, you know, with that being said, it comes with quarterly shifts. And, you know, one of the best ways to kind of explain quarterly shifts is just as simple as, and I know this sounds simple, but it really is, look at the year as a whole, look at what direction you have been going for the past 4 months, and that shifts, right? That shifts. That goes, you know, for around 4 or so months. It's not 4 months on the dot to the day. It's gray, but you know, in and around that 4 months area, as price continues to go in one direction, it shifts. It goes in the other direction for another 4 months. You know, if you think about how the year has planned out so far, the first part of the year, the first 4 months, we kind of consolidated. Next 4 months went higher. Now we're entering a season where price is going lower. Yeah, it's just kind of that 4 month roll around. You know, and we're coming back into you know, as Henry has it on his screen, those places of inefficiency, right? Henry, you can touch on it if you want.
Yeah. I think in this year of price action, well, what's been shared previously, I have this image here. I was going to see if I can bring it up on the screen. So January to April is the yearly accumulation. April to May is the manipulation. May to November is the distribution. And then December resets the yearly range. If you look at this information, it hasn't quite aligned with what we've seen as this year has proceeded. But if you're just thinking of it in terms of power of 3, like if you're looking at the very beginning of the year, here is January's open, right? All the way down here. So we had the open, we had some accumulation, manipulation below, and then distribution up here. We still have, toward the back end of the year, we still have October and November and December to trade, but we've already had this distribution up back toward these highs in the premium rate. It makes sense now to have a return into the range. So how far it could return into the range, I don't know exactly. You could just look at the whole year's range and identify a equilibrium. It's a good thing to note as well. So taking your trend from the low of the year up to the high. Make this a little clearer. So that blue line is your equilibrium. That's a potential area we can trade back into. NASDAQ has had, let me go on NASDAQ too, because NASDAQ has had a bit of a heavier run than what we've seen on ES, and it could potentially have a lot further to come down if we are going to return back into equilibrium with that range. So here is January is right here on NASDAQ. So there is your low at the year, all the way up to the high. and we're much further away from that equilibrium. So if you're looking at that as an area to potentially return back into, now that we've had the manipulation earlier and distribution, in power 3, we could return back into that range. So you'd have your open, your low, your high, and then you have your close of the year. So we'd expect that the close would be, if this is going to be the high of the year, I'm not saying for certain it is, but with the price action delivering lower as we're seeing now, this could potentially be a high for the year. You'd expect, if you're looking at this as a yearly candle, does it let me look at? No, it doesn't let me look at a yearly candle. But if it does, you have your open, your low, your high, and the close of the candle would have to be somewhere in here. So now on NASDAQ, you'd be seeing the same thing. Open right here. Your low was formed, high was formed, and so the close of the candle will be somewhere inside of the range, the overall range of the candle. If that's the case, and we're still bearish, it would make sense to see price continue to trade lower into this kind of range. Does that make sense to everyone? Just looking at power 3 and a candle forms, like if you look at this candle, for example, right, you have the opening price of the candle right here, a low forms, and then a high forms, and then you return back into the range to make the close of the candle. So every candle is going to have an open, a low, a high, and close. And so all of this price action, if you were to view it as one single candle for the year, you have your open, your low, a high, and then the close of the candle would be back inside of the range.
Looking at this monthly, it's clear, you know, at least to me, that most likely the highs are in for the year, definitely. Unless we have like a big rally for October and November, but doesn't look like.
Yeah, if we don't see that, then we're just looking to discount rates to deliver into, right? So this has mostly been traded without inefficiency, but there's still a very large monthly BISI here, which hasn't even been traded into yet on the monthly chart on NASDAQ. So these are potential areas you can look for. This low right here, midpoint of that range, and then down here, which is kind of aligned with equilibrium with the yearly range. So yeah, definitely the potential to see lower prices as we continue into the later part of the year. And or we'll let me check the chat real quick. Yep, I think we covered, so we can move into trades.
Yep. You wanna did you take a trade this week or no?
No, we want to talk, we definitely want to talk about the website on this call too. Now that everyone's been introduced to it, we'll take you through a bit of the website. And hope everyone with account setup, if you haven't done it yet, or we'll just show you a couple things around the site. But no, I didn't take a trade this week just because we've been working on getting a few things set up with email and all. I didn't have the opportunity to take a trade for the paper trade, but we'll still go through and review the ones that have been submitted. And Carson, you can go over yours as well.
Yeah.
I'll just look quickly at, oh, there's the site. Here's last week's task. So the idea was that it was an FOMC week, and we wanted to see how you manage the trade. So just looking at it in terms of power 3, if we're going to have red folder news in the middle of the week on that Wednesday for FOMC, then thinking in terms of power 3, you could likely see accumulation earlier in the week, and then a manipulation going into Wednesday or into red folder news, and then distribution going into the end of the week, which is just like what we saw on our daily chart here. So if we're looking at Monday's action right here, accumulation. Tuesday, yes, we dropped down lower, but mostly accumulation if you're just looking at the body of candles. Then on Wednesday, we have this manipulation move. So the opening price, manipulation higher on Wednesday, and then distribution through the rest of the week, dropping down into the sell side. Okay. So we wanted to look at how you manage trading at FOMC week. When do you decide to trade? You know, when you're having the distribution, that's when your highest probability opportunities are going to occur because it's very one-sided and you can tell where it's delivering to. And so we'll look at when you guys trade in as we review this, and we can see that those higher probability opportunities are likely to occur later in the week on the FOMC. But anyway, you're able to trade whatever your specific model is. It's unique to you. Show your trading style and the management. Use any PD array for entry. And we just wanted to see how you manage an FOMC week when you decide to trade. Here are your rules for position sizing. So if you're still in, or if you're in profit, you could risk 0.5% on your trade. And if you're in drawdown right now, you could risk 0.25% on a trade. And okay, so we'll just jump into it. Carson, I'll let you screen share. Oh, one more question from Luis first. Would I be wrong if NQ holds that 50% consequent encroachment of the wick on the 18th of August, we can be bullish? I'll look at that. Are you looking at a weekly or a daily chart? Daily chart. So that's that. I mean, that's a discount array for sure. If you're looking at inside of this range, you're looking at that midpoint of that wick. Right here, what you're talking about. But just looking at the how price action is developing, and with DXY still looking to reach for higher prices, I would expect that this does not hold, and sell side likely continues to trade. If you did see price trade all the way back up into this range and start trading above these premium arrays and closing above, then you could consider that to possibly hold. But just with the current price action and the draw looking at a weekly chart, I wouldn't expect this to hold because we have sell side here, we have full inefficiency right here in the volume imbalance, and then larger inefficiency right here. But it's good to identify that. It's good that you know that as a potential area to trade into the check please. Okay, I'm gonna stop screen share and pass it over to Carson, and we'll start some trade reviews.
All right, I'll start with mine. So this was Thursday, day after FOMC, equities open. I'll show you if you go back out on the daily where I was kind of playing. Watch this rejection block on the daily. That's kind of where a lot of this, or excuse me, the rejection block consequent encroachment on the daily was my higher time frame area that I was kind of watching around. And in here, basically, so that's that area line that goes all the way across. You've got buy side, sell side. Buy side gets taken. A couple things that I was looking at, right after we kind of take this low, this could be used as a breaker. You've got an inverse BISI, but then you've got a SIBI right here, right? Price pushes up into it. I am entering in 2 contracts right here, right? Look at where my 4,41375, right? I'm entering in the most optimal area that I can on that up closure, selling going short. I went to go put a buy limit as like a take profit, and I accidentally bought back one of my contracts right here. That's why you have that weird buy. So that was an accident on my end. But I immediately sold one more right here to cover what I had originally, because I went in with 2 contracts right here. Accidentally bought one of them back, so I had to sell another one to get those 2 contracts. Stop at the high, right? So stop at the high. Price delivered a little outside that BISI, but nothing crazy, right? Targeting here as a potential take profit. But this was the big liquidity pool. I trailed my stop a little too tight. So when we rolled over, I kind of went break even, a little in profit. I could have sworn my stop was above this high, but I guess I had put it right here because on this I think I had put it on this high, because I got stopped out right there. So kind of a sloppy trade on my end. I'm not gonna lie. I kind of felt that leading up into it. I was a little more anxious for whatever the case may be, because usually I'm not trailing my stop that early. So I got nicked out, right? It was right before price ran into at least this initial sell side liquidity pool. But not only was that sloppy, but I ended up actually re-entering right here, playing an inversion of a BISI and an order block right here with a tight stop, and basically just gave my profits back, right? Got stopped out. I am question on. I'm reading the question real quick. Question on that trade: do those equal highs have an impact on the trader that do not matter? Relative equal highs. Which relative equal highs? Just let me know what relative equal highs. With the red right here, these equal highs. Oh no, those are not. Those aren't a factor in my head. With regards to like a potential draw on liquidity, I'm not worried or focused on those. But so yeah, I gave it back, right? So I had a very sloppy week in the markets. You can see I had a little bit of win right here, right? A little win right here, but that's when I accidentally bought this contract right here. It was $25. I don't really view that as a loss though. It's just user error right in the moment. But yeah, I gave it back, right? So I basically just had a break-even week, right? It's I wasn't able to gain any traction on the exercise account. You know, sometimes you just aren't there, right? And you just know you want to be aware of that, right? And you want to be in the headspace of not beating yourself up, right? It was a sloppy trade, right? It was sloppy management, right? It played, right? The idea played out, right? Sell side overall target right here was delivered, right? I didn't get any of it, right? I think I wasn't able to get a piece of it. And even when I was in it, right, I mismanaged it to where I only had a little bit, right? I need to, as a trader, you need to, as a trader, be okay with stuff like this and know how to potentially fix it and do better and prevent it. But overall, I'm up on the account, right? And I need to just consistently remind myself that you're not going to be perfect, and you have to just sometimes be okay with you know, your performance in the market. Know that it can always get better and you can always refine it, but Like Henry said too, we've been super busy trying to get this website, ready to go for you guys. My focus just hasn't been where it needs to be. And when it's not, you get sloppy results, right? You get half-assed results, and that's what this week was for me. It's good that you guys see this, because if you guys remember when we first started doing it, right? It was 1, 2, 3, 4, 5. For the first 4 weeks, I didn't lose. I told you guys it's all right. I'm gonna lose. There'll be weeks where I get sloppy and I get I half-ass things. That's a week like this week, right? But no reason for me to sit here and get down on myself. I know what I need to do. I know my focus wasn't there, and I know that these trades repeat themselves. And the best thing I can do is come out of the week, break even, let price run without me, and know that next week's a new slate, and I can come back 10 times better. But that was my trade for this week. Obviously, I'm shorting, right? I'm going with that higher time frame bias. This was the bigger sell side liquidity pool. And what's funny though is, in this trade, I'm only aiming for like this price action right here, right? That's where my target is. I'm not even worried to hold for any of this, right? I only want that much of the pie. I don't want all of this. I'm not, you get those on, you have days where you get all that, or you get most of it, or whatever the case is. But on a consistent day-to-day, week-to-week, no matter what, always going to perform. This is what you need this piece of the cake. Don't try to be the guy who needs to be a seller right here and needs to be a buyer right here, right? Don't be that guy. You don't need to be that guy. It's honestly not good to be that guy. You'll have a day where you do catch it, but that day is not every day. So those are my trades for this week. I'm going to go ahead and share my screen. All right. So let me go into here. Only one got sent in via email because all the others were uploaded on the website. So I'm going to go over this one, and then I'm going to have Henry kind of walk you guys into the website, and we'll kind of give you guys a little introductory there. I was happy to see that a lot of people had put them in the website. There was 2 actually last week that were in the website that I totally forgot about that I didn't go over, so I do apologize for not getting to those. But I'll go ahead and go over this one right now. So London expansion on Thursday. Thought we'd get a continuation since we were in a classic expansion week. Waited for the rejection off the hourly SIBI. I like to enter in fair value gaps, and on the 1 minute, and the 1 minute wasn't giving me any, so I dropped down to a 30-second chart. Got a late entry and went short on 10 micros. Took half off at the previous week's low and wanted to hold for the previous day's low. Took half off at the previous week's low and wanted to hold for previous day's low rejection block on the daily chart. Did not manage my trailed stop loss as I'd like to, but we had a few 5-minute SIBIs and I allowed it to go up and rebalance them and continue lower. It ended up stopping me out at break even. We ended up having a choppy AM session, and that's because of the overnight expansion. This is the second time I got caught up in the same scenario. Since we started these tasks, I have to lower my expectations for the AM session. We expand in London. Yeah, I mean, you have the model right here, right? You've got the breaker, you've got a SIBI on the 1 hour, you've got your heart, you've got all of this identifying itself off of a higher time frame area. Price delivers into the SIBI, fills it out, balances it out. You have the breaker, you've got another SIBI, right? Where you have the ideal entry. Get accustomed to, what do you have to do to be there, like be in that that position, right? Find that ideal. You see where you're supposed to enter in, right? You have the ideal entry, right? How do you get accustomed to actually being a seller in that SIBI, in that breaker, in the time it's delivering into it? So even though you were a little late to the party, um, it looks like you still entered in where you should have, right? You have a SIBI right here. You have an order block, price delivered up into it. That's why we tell you guys, we encourage you guys to show us your executions, right? Because just looking at this, I don't know what candle you entered in on. I'm not sure. I don't know where exactly, what time of day you got in it. And so having those executions toggled on allow us to really understand where you're entering in. But if you enter it in here, somewhere in here, I mean, it looks like overall your trade was,
for some reason I thought I had the executions on, but instead of like taking a screenshot, I put the I just copied the image from TradingView
oh, okay, I got you.
and share it real quick. If you give me a sec here.
There's I'll mention too, there's something in if you go into your settings on TradingView, you go into your chart settings and go to trading. All the way at the bottom, there is a little checkbox that says orders, executions, and positions on screenshots. And if you click that, when you do your regular screenshot using that camera button on TradingView in the top right, it will show your executions on the screenshots.
They shared it in the chat.
Yes. Here, I'll share it on
Perfect.
I got you.
I don't know if it's the same for the second terrible trade that I took, but
Yeah, so I mean, you're good. It makes sense. So yeah, see, I can read this a lot better. So your entry's still good. You paid yourself, right? You paid yourself, and really gave yourself the ability to go out and have these other 5 at break even. The only thing that I would say, and I think that now that I see this, your annotations make more sense. I would say if down here was your terminus, and I really like to do this a whole lot, is when price gets like 5 to 10% away, right? If you're like at the point where you're like 85, 90, 95%, of the trade is kind of already played out, I'm real quick to, partial's been taken. We're right there, but we're not quite there. I just start jamming my stop. Like I put it almost at every 1 minute high, right? So after taking this, as price starts to deliver down here and you're in here, I'd put my stop at the swing high, right? And I wouldn't care, just because at 5 contracts, right? This helps, right? Getting stopped out here is a lot better than even getting stopped out here. When you know that obviously there's inefficiencies right here, that can obviously go get delivered to, which did. But I mean, it's still a good trade. Like you on 5 contracts, right? Entry was good. You had a little bit of heat for only, oh, this is a 30-second chart. That's wild. I didn't even realize that. So yeah, I mean, great model, right? Price delivered up here. The only thing I would say is 2 things to kind of consider. Try to figure out a plan for yourself that fits to trail that stop loss as you kind of are getting a little bit closer, and closer and closer and closer to that terminus, and be okay with, as that trade gets closer to that terminus or take profit, whatever you want to call it, the more you have that feeling of like you want to be right, and I would say try to fight that and kind of let yourself surrender to it, I would say, and just try to see if you can trail that stop loss a little bit better. But you paid yourself, so how you manage that trade after is totally up to you. And this is still fine, right? The break even is still fine. So on top of that, the only other thing I would say is see what you can do to sell up here, right? This right here and this right here, this is a lot lower risk for sure. But I want to see, you can get these entries for sure, right? These are entries that you really want to get in. Those are the most ideal entries, like you shared in your picture. Yeah. So isn't the 30 seconds too low of a time frame to trade on? No, there's no such thing as too low or too high of a time frame, right? It doesn't correlate directly. People trade time frames based on their personalities and the way that they feel as if they can comfortably engage the market. The 30 seconds might be too small of a time frame for somebody, but clearly it's not too small of a time frame for him because look, he's entering in where he needs to enter in on, right? So if he likes the 30-second time frame and it's something that correlates with him as a trader and the ways he likes to engage in the market, trade it all the time, right? Same thing with somebody might trade the monthly, right? And I personally am not as good with trading higher time frames. I actually do, as a trader, do better on the lower time frames, right? It's the way I make decisions. The more I have to sit about something and think about something, I second guess and overthink, my opinion on that specific thing. I tend to make a lot more of my rational decisions in the moment, instant, and I don't like thinking about it too much. So it's all the way you perceive the market and what you see fits yourself in your trading. But overall, great trade though. I mean, there's always things that can get a little bit better, but I would say two things to take away. See what you can do to get an entry up here, right? That's an ideal thing. Even though I agree with the whole, you're entering in coming off of that, but I want to test you and I want to see, if you can actually, be a trader on this up closure candle right here, or this up closure candle as it leaves that hourly SIBI. And then, when price gets down here, and I'm assuming if this is where you were wanting price to trade, as it gets to that final 5-10%, trail that stop and don't trail that stop a little bit tighter, and then don't feel bad if it hits it, right? That's what it's made for, right? To really jam it. I had some problems this week managing my trades, so don't feel bad. Don't feel bad at all. Henry, so this was the only trade that was actually sent in. The rest are on the website. So do you want to show them? Do you want me to show them? We can continue to go into those trades, but I figured we could go into them on the website. Tori asked what my time frame was. I'm usually entering in on the 1 minute, but it could be anywhere from 5, 4, 3, 2, or 1. That's like with regards to like execution. I mean, I look at all time frames. I use them all. I use the weekly, the daily, the 4-hour, the 1 hour, the 15-minute. But with regards to executions, yeah, 80 to 90% of the time it's the 1 minute.
Okay, so I'll just show everyone quickly how to get to the area to submit if you haven't done it for yourself yet. So here's the site we email to everyone, right? firsthandtrading.com. This is going to be our online headquarters for everything we got going on here in the groups. So when you get to the site, you'll see these start now buttons everywhere. If you haven't made an account yet, you can click on that and it will take you to a login or a create an account page. And that's where you can go ahead and create your account. Yes, sir, we got the website going. Okay, so you'll create an account here. You'll click the start now button and you'll get to that login page. All you have to do is put an email and a password. and you'll create an account. Then after you do that, you'll be able to go in here if you like and go to your profile and your account, and you can edit a bit more about your profile, put a picture if you want, change your username if you like. And then after you do that, you'll be brought to this members page. And up here, you just have community forum, first-hand social, and our event calendar. So those are the 3 pages that you get access to exclusively if you're signed in. If you're not signed in, you won't see it. And then after you sign in and get to here, where the submissions happen is going to be in the community forum. So you can just click on that. And you'll be brought to the forum right here. We've got all our different categories in here. So if you go ahead and take a look through here, there's a lot of great submissions already, and we encourage you to get in and do some submissions yourself and start engaging with one another. This is going to be a great tool and resource for the community to help each other grow. Also, when you come in, go into welcome to the forum, and you'll see this post right here, introduce yourself. And it'd be great for everyone to hop in there and do a comment and just tell a little bit about your story, what got you into trading, how you trade right now, and just share a bit about yourself in there. So I'll go back quickly to the forum. And if you scroll down when you're in the forum, you'll see this category right here, training exercises. And if you click on that, you'll be brought to all of the old exercises right here. So this one was exercise 6. And then if you click on there, you'll see the whole task. And then to do your submission, all you have to do is click write a comment. And you can go in here, type up your journal, click this little image button, and then do your screenshots, submit them right there, and then click publish, and it will share. And so you can see we've got these submissions here, and people can go in and leave you feedback. You can provide feedback on others, and Carson and I will be in there as well. Any questions on how to get to that? Or else we'll go ahead and jump into these trades we got in here. Oh, good. Okay, good. All right, so first one we got is from Kate. This one trade for the week from Power Hour yesterday. So this was on the 20th. I think this was on FOMC day, Wednesday, it looks like. So this is great. This is I'll read your journal in a second, but I'll just say first that in terms of the FOMC week, we were thinking about Power 3, right? How are we likely going to see the news play out? You'll have accumulation leading up to the red forward news, then some sort of manipulation like we see here. So at 2 p.m., the first FOMC news comes out, and then we have conference at 2:30. So 2 p.m., then between 2 and 2:30 is where most of the time you have that manipulation move. So this is going to be your Judas swing on the FOMC day, not this first one, the move that happens between 2 and 2:30. So we're trading up here, trading above the buy side, and then you're able to go into your distribution for the rest of the week. So really great job timing this trade, getting on side with the distribution and being able to look toward that higher time frame. I'll just read into your trade idea here. So waited for the dust to settle after FOMC for an entry, saw that we took buy side and started selling off, respecting several premium PD arrays along the way, signaling that price had lower targets. After price displaced below previous low and a bearish breaker, I got in at the SIBI consequent encroachment. So you have your high, your low, a higher high right here, and then it's purged right here. So that's going to be your breaker right there. Inside of here, dragging that out, and then in confluence with that little SIBI right there between this candle's low and this candle's high. So very nice entry right there. Very good confluence. And then trading lower. So I'll read into the emotions. Before, fairly calm after seeing the way price behaved, I was pretty confident that we would go down to take the lows. during the trade, it's still really hard for me to remain level-headed, even when price isn't doing anything to negate my trade idea. I know this stems back to lack of confidence in my ability as a trader, so definitely want to work on this. Anyway, I was feeling a little bit anxious as I watched price return to the bearish breaker and fair value gap, and I decided to cut the trade at the hourly wick consequent encroachment, which also lined up with the low we just created for a 3R trade. After the trade, honestly, I felt really annoyed that I didn't have the confidence to hold the trade to my original draw on liquidity, which was prior day low, despite price going my way basically immediately and never giving any indication it wanted to reverse. Surprisingly, I'm more than okay with missing the rest of the move down to prior day low. I'm just upset that I had a clear draw and couldn't hold for that. At the end of the day, though, I need to remind myself that my analysis was right, and capturing small pieces of big moves consistently can lead to extraordinary long-term results. So that's perfect, Kate. Great mindset around you only need a piece of the move. You don't need the whole thing. You still got a great entry here, right here. Very nice model using that breaker and SIBI aligned with the higher time frame draw.
This week's,
And actually,
I was gonna say,
yeah, Carson, about to touch on it.
yeah, I was gonna say this week's exercise is gonna help with that.
Yep. This week's task is gonna help with that higher time frame draw. And you mentioned you're feeling like you're not there yet, but you're gonna get to that point of being able to hold for the higher time frame draw, and it just comes incrementally, right? We're not no one is going to be able to start and just take a trade and hold it, no partials straight to their terminus. It takes time to build up into that. And the way that you do that is you get a small piece and then you watch it trade the rest of the way. You get a small piece, you watch it trade the rest of the way. And then you start getting to a point where you take the majority of your position off and you leave a little bit of a runner, and you let that runner trade a little bit further. And when you start getting uncomfortable, you hold it a little bit more, and then you cut the trade right there. And you do that again and again and again, and then eventually get to the point where you can hold that runner all the way to the terminus. And then you continue to build from there. Maybe you take a little bit less of your position off at the first partial and let more of it hold for the terminus. So it just takes time, and you're doing the right things by still following your plan here. You still had a great trade. You still managed to get 3R on the trade, which is a super awesome trade. And the most important thing is you are able to identify that higher time frame draw. And once you can identify that and you have a model to trade, over time, you're going to be able to take this trade right here and hold it all the way to your draw. Or at least, it's still smart to take partials, but you'll be able to hold more of it all the way to your draw. So very well done. Very nice trade here. And, yeah. Person, you want to talk about this one?
Yeah. So, hold on. Let me.
Or you can. You want me to pull the image up first? Or?
I can pull it up on mine. I have it up.
You want a screen share?
Yeah, I'll screen share. Alrighty, Mr. Axel, what do we got here? Alrighty, number one, I saw that 957 we had failed to take the daily high before running for sell side liquidity. Given that we are pre-FOMC, I'm expecting a lot of engineered liquidity. I was under the impression that we could revisit buy side. Number three, classic case of trading PD arrays just for pattern's sake without the correct narrative. 957 fails to take the daily high before running sell side. 50%. Okay, let's start right here. 50% line of daily fair value gap range we get stuck in, and point at which I started considering getting out after the candle printed. Still don't know why I held against my better judgment. All right, so obviously you're looking for buy side up here. You're looking for price to trade into the new day opening gap. 40 handle terminus RR for risk and quarter%. So 15-minute fair value gap. Yeah, I mean, the model's there. So I think one thing is key too is higher time frames, right? Higher time frames. What's the draw, right? I see the buy side liquidity, but over time, you have to start to realize too, where's the order flow? What's the bias, right? When Henry gets on the midweek call or the group call, like we've been, or over the next, I would say over the past week or so, right? It's been bearish, right? It's been towards sell side. So you have to keep that in mind, right? You have to be, in your head, you have to be aware of what could potentially unfold. Even though I see the market structure shift and I see the BISI, right, clear 2020 or 2022 model coming off that 15-minute inverted fair value gap. But the thing is the higher time frame order flow, right? And you know, I would be suspect to see this too, though, right? Yes, this is a liquidity being taken, but it's also structure showing you that price has made a lower low, right? And you're also you're aiming for an area in the market that's already been tapped into, right? The SIBI has already been tapped into. Has it been fully filled? No. But it's already been used, and price actually went, if you did the consequent encroachment of it, it probably traded up into the consequent encroachment and away from it, right? Indicating that the market has a heavier side of bearish order flow to it because it's unwilling to trade all the way up to this. So the model is there, yes, but I would say the higher time frame order flow was not there, and I would say the draw on liquidity is key because I like the clear sell side right here, right? I'm at buy side. I like the clear buy side. The only thing that would keep me away from it is the higher time frame order flow. That's going to be key. So emotions going in, blind confidence from failure to take a necessary amount of information. Emotions during, after realizing that the 1 hour still had 15 more minutes to finish printing, it did make sense for it to reverse on itself into my terminus. I started to realize my blunder. Feelings intensify when we fail to trade back above 50% of the daily fair value gap. Emotions after. Classic gaff. Jaff. I don't know what that word is, but I'm going to start using it. Relief, it was only demo as I'm expecting to take better quality trades after news release. But disappointed I didn't realize I wasn't taking it seriously. And I wasn't taking it seriously enough until after I was stopped out. Might try to mitigate loss after news event. Glad I only risked 25%. Yeah, I mean, this is why we do this stuff. I think there's stuff to be learned in this. But even this, right? This is a good trade, and you got stopped out accordingly. You was what you could. I would say if there's one thing that I can really nail into this trade is notice this BISI, but on the candle that stopped you out, I encourage you to start studying, and this is where, look how price inverts it, right? Look at how on this candle we closed through this BISI, traded away from the new week opening gap and new day opening gap. It's right in this moment when price trades back up into here where you could be a seller, and all things aside, price kind of shows its hand, and then you can make that loss up being a seller on the inverted side of that BISI. So it's there, it's all right there. It's just shifting your attention elsewhere. I would say, next time go in and try to see if when price fails that BISI and collapses that trade, if you've got things lining up, new week opening gap, new day opening gap, price trades away, comes to test it, clean fill of the BISI invertedly, and go lower. Right, that's the best thing I can add another one. So the annotations are pretty self-explanatory, right? You got a PM sessions over bullet, so you're trading into the CIBI. Great entry. Waited for price to trade into there. Stop loss was moved to break even when you traded into here. Stop loss moved to cover previous loss right there, right? Perfect. That's fine. I would say I would pay yourself to cover the loss rather than move your stop loss, right? Keep stop loss at break even and pay whatever you need to pay to cover that loss instead of having the stop loss move with you. And then you can pay yourself more rather than have the whole thing riding on that, right? Pay yourself to mitigate the loss, and then maybe move the stop down, maybe move the stop a little bit, but overall still kind of hold. But you mitigated loss, right? It's good. You're able to get one. Right, you risk half the trade, and you were able to get 15 handles out of it. Emotions, you're a lot more neutral. Oh, and I will say too, you can tell you have a lot more understanding of what's going on, right? You've got you've got an idea. Sometimes this, right? You've got a little bit of things, right? But you can tell you've got so much more evidence of the things just being labeled, right? There's so much more being labeled. Yeah, that's just a higher time frame. You can see where his higher time frame draw was relative to lows. Demo balling, baby, demo balling. Henry, you want to do this one, or do you want to you want me to do it? It doesn't matter.
Yeah, go ahead. Since you brought it up.
All right.
I'll just have one more last comment for Axel. You see in the chat, you said, I think on the second trade, I risked half of the last time, so taking a partial would have been around $100. I think this is a good note for everyone. It's just that when you're mitigating drawdown, you don't have to mitigate your entire drawdown in a single trade, right? So while taking a partial there, and thank you for sharing this, Axel. I appreciate you sharing this because it helps everybody learn. Taking a partial there, even if it's just $100, and let's say your first loss was 200 or 250, you're now putting yourself in a better position in terms of your account, and you're also putting yourself in a better position emotionally, right? Because now you know that you've taken your drawdown from 200, let's say, to only 100 after you've recovered the 100. Yes, you haven't made it all back yet, but that's fine. You've covered half of it, and now the rest of your trade can still play out because your emotions are reduced. You may be able to recover the rest of the trade with the remaining portion of your position. Or if it gets stopped out break even, you've now mitigated half your loss. And on the next trade, you only have to recoup half of the original loss. And so the pressure is removed from you and you're able to work out a drawdown slowly. It doesn't have to happen immediately, and you'll actually be able to do a better job of mitigating your drawdown and still respecting your risk by doing it over a series of trades. So yeah, this is a good note. You want to continue to do those right things and take the partials where you should, even if it's not mitigating the whole trade. That's totally fine because you're doing the right thing and you're working your way out over time. So well done, Axel. Thank you for noting that.
Alrighty, Mr. Allen had a 1 hour higher time frame, big Bissy, going to a big Sibby. The 5-minute was an inverted Sibby. Said it was a little risky. It wasn't the best entry. Taking a partial made going to stop. Taking a partial made going to a stop with target 2. Not at all worrying. I was a little nervous at first as price was lagging and going lower. I really wanted that inverse fair value gap to hold. Take profit 1 was chosen because that wick at 945 showed an unwillingness to go higher, though I was hoping I'd be wrong. Happy I can't help it. I'm human, but shouldn't let it win affected too much. On to the next one. yeah, so obviously draw liquidity is the 1 hour busy up here. He's aiming to take some partials and move his stop loss right here at this high. Right, he's got the SIBI, price trades up over it, inverts it, right? He's entering in as we kind of are slowly getting outside of that SIBI. There's also a BISI in here. I would say you can be a little, if you be a little bit more patient next time, you'll get a little bit better entry on this wick down here. Still a good entry, but if you really want to use that SIBI, be patient. It's, you know, if it's gonna fill, it's gonna fill, and that you can see it just taps it on this one about 15 minutes later. Overall, great trade though. You for the most part paid yourself. Risk was taken off the table. I'm not sure what. I'm assuming you got stopped out at break even. I'm curious to know what kind of happened following. I'd like to see, maybe you might have been able to pay yourself and cut some of the risk. Maybe there could have been a little bit better management on the break even side of things. But I'm not sure how price. I don't know if price ended up delivering or not. He said micros are slow. Micros do make me feel safer though. I can't help it but let that little voice in my head say you should have traded minis. But that's how I trade on emotions and break rules and blow accounts. You are correct, right? Whether it's a micro or a mini or a regular contract, it doesn't matter because it's on a demo account. Money's not real anyway. Whether it's $1 or $100, it's not real. So it doesn't. I mean, you don't want to think about that way, right? Learn that part of things will grow over time, and if you make the correct decisions, right, you don't trade minis without trading micros, right? You have to take baby steps. You have to, let that boringness side of that stuff settle inside of you. So it's not you don't want to try to feel something, right? You don't want those emotions, right? The more bland it can be, the better. Alrighty, so here's another one, a short, being in profit almost instantly. This felt easy, and that is not a good feeling. Naturally, I felt a little uneasy. Clear higher time frame draw on liquidity, clear direction of price, clear entry on a lower time frame on the next one. Right, you can see his entries. He's basically getting this low liquidity run into that sell side liquidity into the new week opening gap. Yeah, I mean, you looks like you managed this one pretty good. You're just kind of getting that very last little end. Those are some of the nicest trades where price is very close to that liquidity, and you're able to get that low resistance run into it. But yeah, I mean, pat yourself on the back and on to the next one. He said, I took the trade on my personal account and I tried to mark it on TradingView to explain my thoughts. I only show my P&L to show, not to show off, but to show I actually took the trade, since I forgot to execute on TradingView. NinjaTrader I was looking at the 1 minute, while TradingView was on 5 minute. I usually don't promote 1 minute as it is too chaotic for most, but I forgot to change it. So I won't be changing my paper account to reflect this trade. Still good. Yeah, you don't have to change it. Whether you wanted to take it live or not, we don't encourage people to take these training exercises live, but if you want to, go ahead. That's great. But yeah, really good trade. Very low resistance. Yeah, so those are some submissions this week for some of the trades. The website is here. It is at your disposal. I'll have Henry if he wants. Henry, you can walk them through the task this week.
Yep, I'll go ahead and do it. Okay, so for this week's trading task, you'll be back in that trading exercises category on the forum again, and you'll just go to exercise 7 right here. Click on that, and that'll show you your full task here. So this week, the idea behind the task is going to be to encourage focusing on the higher time frame draw. and working into not only trading with the higher time frame, because that's where you're going to have your better opportunities, but also working toward holding a piece of your trade for that higher time frame draw. Okay, so the idea behind the task is to encourage focusing on the higher time frame draw. Lower time frame trades backed by higher time frames will have a greater probability of playing out. Prior to entering a trade, identify a 1 hour or a 4 hour draw on liquidity. So before you're even entering your trade, make sure you're marking out on your chart what is that 1 hour or 4 hour draw on liquidity that you believe is going to be traded to next. That could be an old high, an old low, or some inefficiency that you see on that 1 hour or 4 hour chart. And this week, we're asking that you hold a piece of your trade to that draw that you identify, or until the trade is stopped breaking. So you don't need to hold your full trade to the draw. You only need to hold a piece of it. Like let's say instead of trading 1 mini this week, you trade 10 micros instead. And when you get to your first partial, you can take 9 of them off and hold 1 micro to the draw that you identify. So it should really reduce the emotions and just help you to work on holding that one piece to see if you identified the right draw and if your trade's going to play out to it. So trade the same model that you outlined in last week's test and show your unique trading style and management. Utilize any PD array for entry, and then journal your trade and include that with your submission. And the journal specifications, what you should include, are down here. Your account balance is going to remain the same as it was when you finished in week 6, and it's up to you to calculate your contracts and lot size. So the goals are hold a partial for that higher time frame draw on liquidity. You're welcome to take partials, but a piece of your trade must be held for the higher time frame draw you identify. It's suggested to trade micro lots so you can take out the majority of your position and just leave a small piece. 2 trades max this week. If you're in profit right now, you can risk 0.5% of your account on the trade. And if you're currently in drawdown, risk 0.25%. And if you win your first trade, stop for the week. And if you go to break even or lose your first trade for both of these, you can risk another 0.25%. Okay. Target and hold for that specific 4 hour or 1 hour liquidity pool or inefficiency. These are the minimums that you want to reach for. And if you're looking at a 1 hour liquidity pool, likely that won't be in trouble. Partials are welcome. Moving and break even is welcome. And make sure you're always using a stop loss. And then in your journal, just make sure to include the duration of your trade, the size you're trading, the number of lots. You can include this. This isn't as important, really, risk reward, because it's going to change that your trade. And also if your model has a higher win rate, you could even have a negative risk reward and still be profitable, but ideally it's a positive one. But that's not as important, but feel free to include it if you like. The time of day you're trading, the model that you use, the draw you're targeting, that 1 hour, 4 hour, and then how you're managing the trade. So stop placement, partial sinking, and the time you went to break even. And make sure to journal your emotions like you saw in the example ones from a couple of weeks earlier. And just screenshot those results by the end of the week, and you can submit them right here. So again, you'll just click to write a comment, type your journal in there, click this button right here to add your screenshots, and then click publish. Okay, and I'll just show an example of kind of what we'd be looking for in this week. So here's Friday's action on an hourly chart. And this would be just a trade idea, right? So here is price move lower on Thursday going into the end of the day, consolidate into Asian session, moving up higher in London and into the New York AM session, trading up into bearish order block right there. Note how the bodies of the candles are respecting it very nicely. And I can identify a 1 hour. And look at these equal lows down here, but you don't have to reach all the way for that. We're just looking at on the 1 hour or 4 hour, what is a potential draw, right? So we have somewhat relative equal lows down here. We have a swing point So on the 1 hour, if this is going to move lower off the order block, there's going to be sell stops resting under this low. So we have a lower low on this candle and a higher low here. There's going to be sell side liquidity and sell stops resting under that low. So anybody that went long in here is going to have to protect themselves with a sell stop here. So now I have my 1 hour draw and I have my point of interest. Now I can go down into the lower time frames and see how we could trade to that draw. And so now in the lower time frame here, buy side liquidity is being merged right here. And shifting market structure under this low. Okay. Trading back up into a premium of this range and into another order block. And then we start to move lower again. I can go into a lower time frame, like the 2 minute. And what do we have here? As we're trading into this, we're running out a high again above this high, breaking back lower. And now look at that as a bearish breaker. So we have a high, a low, a higher high, and then trade through here. So you have a bearish breaker, and also a city right there. So I can enter short right here and place my risk above this high. And then since we're holding a piece to the terminus, what I could do is take a partial under here, or I could take a partial under here, and I'm holding a piece of it all the way to here. So my last exit would be right here. You don't have to hold the whole thing, but you're holding a piece of it to right here. So let's say you sell 10 micros right here. You can take 7 or 8 or 9 of them off right here, and then just hold that one final lot to right here. And of course, you're trading your model, so you don't have to take a trade like this, but just the idea of holding identifying that 1 hour draw and then holding a piece to your terminus is what we really want to focus on this one. Any questions? You can look in the chat, or feel free to come on if you have any questions.
And yeah, guys, just keep it in the back of your mind, right? We're trying to get everyone to kind of start to use that website. We want to get to a point where in the next week or so, we want to get everything kind of just on there, used on there, communicate on there. This week I'll still, we're still kind of working out some kinks on the emailing side, but look out for that email address, team@firsthandtrading.com. Make sure you add that to your contacts so it doesn't get lost in spam, because that's how we'll be able to kind of communicate with you guys. Even outside of the website, obviously we can all communicate inside the website. But yeah, super excited that the website's here. Right, it's been a long time coming. I know we've kind of held it from you guys for a minute, so it's here. It's a tool, right? It's fun, it's cool, but it is, at the end of the day, it's a tool. Use it. There's all different types of traders, experienced, non-experienced traders. Be active. Figure out. Don't hold back. If you have a question, someone's got an answer. I'm excited to see where we go and where we grow. Someone had a question really quick. Axel said, I think it'd be worthwhile for people to see that they got it Friday and lunch macro you took.
Yeah, we can look into that. I showed a couple things on Twitter on Friday.
When to expect, Dimitro said, when to expect lunch high and to be taken out and when not to. Yeah, that's something we might not get into it today unless Henry, you want to get into it, but I can definitely take it.
I guess I'll touch on Demetrius first, and then we can look at the things Axel mentioned. So your lunch, the hour is going to be dependent a lot on what's occurred in the AM session, and then also what is that higher time frame draw. So like if we're looking at Friday's action, for example, our lunch hour, oops, where's my purple? That's our lunch hour. So the liquidity that's being set up right here is here's your lunch lows and here's your lunch highs. And in the PM session at 1:30 is when you could really start looking. But after the lunch hour here at 1, we can start looking for the high or the low to be purged of that lunch hour. And so here, like we were looking at on the 1 hour chart, we still have that draw down here. And we have the equal lows down here, which haven't been met yet. And price has already traded into this bearish order block up here. So we're bearish on the day and on the week, and not expecting price to trade any higher. So we're anticipating that this is already the high of the day right here. And so then you can look at what is occurring during your lunch hour. We're trading up into a premium array. And then as we go into the PM session, we can look for these lower prices to trade. So this is what we kind of come back to this again and again and again when we're talking about a lot of trades, is that the most important thing that you can identify is that higher time frame draw on liquidity, because that's going to tell you what is most likely to happen next and where the rest of the day is going to proceed. If just looking at this hourly chart, you see how this candle is trading up into the order block right here. The bodies are perfectly respecting it. Here trading up to that mean threshold of the order block, and then the body, the open, very nicely respecting it there. And we've left all of these lows down here on a week that is bearish, looking for lower draws. So here we're trading into a premium array, bringing that high of the day. Now we can expect that we're going to continue trading lower into the PM session. And the lunch liquidity that is set up is going to be a potential target for you as you enter your trades. If you're entering a short here inside this little city, then the lunch lows formed during that 12 to 1 can be a target for you. Does that answer your question, Demetria? Let me know. Yes, good. Okay. Great. I'll go in quickly and touch on the I'm still talking about. So TGIF is when you've had, that stands for I think on Friday, and it's a model that Michael's talked about for on Friday, often having a retracement back into the week, the range of the weekly candle. So we're on a weekly chart here. And it's likely to happen when a higher time frame point of interest has already been, especially when a higher time frame point of interest has already been met on your weekly. So like if our weekly draw on liquidity has already been reached, like here we were looking for sell side under this low, and we were looking for these inefficiencies down here. And so when we see that, we can expect on Friday to have a retracement back up into the 20 to 30% of the range if you draw out your range. So I'll take my fib and put it on the high. I'm not gonna be able to mark the low on the weekly because we ended up closing lower. But notice how I'm putting it on the high of the week, and then higher to This low is going to go on the low that was formed prior to this drop down into the end of the day. So that low, 66.5. Okay, so these lows are the same. So I'm drawing the fib from the high of the week, which was 5. Right here. This was the high of the week on Monday. And the fib is being drawn from the very high of the week down to the low of the week. And then I'll put on, I have a template for it, TGIF. And you'll see it's the 20 and the 30%. And so you have the high, you have the low, and then we're looking for that retracement up into the 20 to 30% range. And you can see after that was fulfilled on Friday, then price was able to trade back lower as well. So you could potentially, on a bearish week where we've been trading lower all week long, you can look for an opposing move on Friday to trade back into that 20 to 30% range. So for me, on this week where we'd be looking to sell all week, you could be a seller Monday, Tuesday, Wednesday, Thursday, and then potentially look to be a buyer on Friday as we return up in that 20 to 30% range. And so here, you can see something like this. Here is the London lows right here. And if you look at your chart on NASDAQ as well, here's the London lows on NASDAQ. You can see we had a S&T, right? So ES failed to purge its London lows, and NASDAQ does purge its London lows right there. Then, after you see that occur, you get a shift in market structure. Go into 1 minute. See that happen right there. Notice when it's happening as well, right? We made this low, just purged after the New York session open. We're setting up all of these relative equal highs up here and up here as well. We're heading into 10 a.m. and then we're creating that higher low here with the S&T. Shift in market structure over these highs. Right there. We can be looking for buy side above here. And we can look for that 20 to 30% of the range. And so the low is purged, shift in market structure, and then here, turning back into a discount of this range. And you can potentially look to be a buyer down in this area. Or if your model hasn't formed right there, or this doesn't suit the way you trade, then you can look for another entry in this area to trade up the buy side. So let's say you want to use a inversion, do something like this. We're trading back down into a discount, trading back above it, closing above here. You have this BISI and this inversion city right there. You can be a buyer right here. Put your stop under these lows and look for the buy side and look for price to trade up into that 20 to 30% of the range, which happens right here. So that's going to be your TGIF. It's not the actual model, entry model that you're trading, but it's the idea that price is going to return into that 20 to 30% of the range. I'll draw it out on NASDAQ too. There was a nice one. NASDAQ. Um, So taking that from the high to the low of the week, and then I'll put on the GIF template. And we're seeing that 20 to 30% of the range, and know how NASDAQ trades up to the 20 here, and then reaching up to the 30% of the range. Just over it there, tapping it again right there, and then trading lower into the end of the thing. So you can find your model anywhere, you know, your model that you like to trade anywhere down in here to reach up to these buy side targets on Friday. Chingiz, thanks for joining us. Post your trades from last week. Okay, perfect. All right, enjoy the rest of your weekend. Okay, that covers TGIF. I'll talk about the lunch retracement. As well. Doing last questions and close up. So the lunch retracement is that was about the lunch macro, right? So there's a macro that occurs between 11:50 here and 12:10 there. There's a macro that occurs in that time window between 11:50 and 12:10, where price is likely to return back on stops that have been trailed up or trailed along throughout the day as we head into the lunch hour. So lunch hour is going to be 12 to 1. As we head into it at 11:50, you can look for a price to return back on those stops. So here from the New York Open right here, we have 9:30. We've made the low. We're trading up all AM session, and notice how we're purging these highs, and then setting up right here equal lows. And anyone who's been long in this throughout the day, if they've trailed their stops, they've likely put them under some swing low. And so we can look to what lows have formed prior to that macro, 11:50 to 12:10, and before the lunch hour. And we can look for a retracement on the stops. So right here, we get a 2022 model that aligns with that as well. So here, buy side is being purged. Here, a shifting market structure. Right there. And then right here, we're left with a city. And you can take that trade short right there, looking for a retracement on these stops. But notice how we tap right back into it again as the lunch macro begins, right? 11:50 is right here. 11:51, we reach right up and hit the low. This is already a balanced price range because it's traded all the way to the high and back out the low. So we're tapping it right there, and look right where we trade to. Those stops. Okay. So that's going to be an example of the lunch macro coming live. And what this shows is you can, even on a day where you're having a bearish morning, you can still take an opposing trade as long as you have the, time and price on your side. So yes, this was moving up all morning. It still sets up a short opportunity if you want to be a short seller back down to these lows. You just have to wait for the right time to do it. Like this, for example, could be seen here as buy side being purged and then dropping down under the lows and the city. Some may see that as a 22 models short, but the time isn't right yet. We still are reaching up into that TJF, and we're waiting for the lunch hour for that potential retracement on the stops. So if you're shorting in this one, it may fail and continue to trade up toward these highs. Whereas here, now we're entering the lunch macro and getting ready to retrace on the stops going into the lunch hour. So it's always important to have not just your model, but also what time are you trading that model at? And is it in line with what the likely draw is? So there's just a little note on that. Well, I'm sure we'll touch on more of this stuff and more of the macros and stuff as we go on in the group, but just a little thing to note there. I shared something about it in the forum as well. If you want to go check it out in a little bit more detail, you can go into the trading models and click lunch macro model. And there's a little description and a video you can watch on it as well. So that's it for me. If anyone has any questions, feel free to pop on and ask. Go check out the website, firsthandtrading.com. I have a lot of great resources starting to build up on there. Feel free to jump in the forum and make a couple posts yourself, share some analysis, share your trading models, and start engaging with each other. And Carson and I will be in there. And we're excited for how things move forward there.
We will be
Thank you all
in
for
there
being here.
indeed. We will be in there indeed. I hope to see you in there too. Yeah, you know, if you're new on this call, and you know, trading's always been my biggest passion. And you know, helping others at the end of the day is I think if you're fortunate enough to figure this stuff out, I think you're foolish to not you know, give back to the community. And firsthand trading is myself and Henry, you know, giving back, right? So use it. It's a tool. You know, that's really the biggest thing I can say is just use it as a tool. You know, we're not trying to be better than anyone else. We're not trying to do any of that. It's just this is our own kind of way of giving back. You know, we didn't want a Discord, we didn't want a Telegram. We wanted to make our own thing, and so here it is. But yeah, you know, that's all I really have for the rest of the week. Me and Henry will be in there. We'll be active, posting away. If there's anything else, let us know. And we'll keep rocking and rolling. We'll keep rocking and rolling. Yes, I can now shave my beard. I will. Next time you see me, I will be a lot more clean cut. So it's been a couple months coming, but we're here, excited to share it with you guys. And yeah, not a problem. Hey, there's still more damage to be done there. But yeah, enjoy the rest of your Sunday. Enjoy your week, both inside, outside of trading. New week, clean slate, new opportunities. It's a kind of a weight off our shoulders now that, you know, I've been wanting to show you guys this for a while, so now it's at a point where we can use it. So appreciate y'all. Trade safe and enjoy your Sunday. Peace.
There you go.